SERV Robotics is scheduled to report quarterly financial results on November 12th, and I wanted to provide a little update on the company before you evaluate these upcoming earnings results. SERV Robotics stock is down 21% year to date, and this is a company that offers driverless robotic delivery of food from restaurants in a few cities right now, and it's expanding rapidly. So let me share some details about this business.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So some key financial highlights for investors to know about SERV is that total revenue reached $641,000 in the most recently completed quarter. That was a 46% increase from the first quarter of 2025. Still relatively small compared to the overall size of the business when measured by the market cap or by total operating expenses, which came in at $20 million in the most recent quarter. So $20 million in operating expenses and just $641,000 in total revenue. So it's still in very early stage development. It's still developing these robots that deliver food from restaurants to individual homes. If you live in the Los Angeles area, you've probably seen a lot of these. I know I've seen a lot of these every single day, and I've been surprised at their mobility, their ability to navigate traffic stops and crosswalks and traffic lights and people both on bikes and walking in the crowded streets of Los Angeles. So I've been impressed with the technology, and I looked deeper into it. It's got a partnership with Uber. That's one of the ways it's gaining new customers in restaurants is through partnerships with Uber that's introducing the company to new merchants. And of course, the big positive I see here is the ability for SERV Robotics to lower delivery cost for restaurants. Right now, restaurants can deliver food to people's homes utilizing Uber Eats or other food delivery platforms, but the cost per delivery is relatively high compared to what it can be with these robots because they're so much smaller. And of course, it's driverless. You don't have the driver to pay for. And so the potential to lower cost is massive. And that's the tailwind that will support growth of this business. The restaurants, Uber Eats, there's a lot of stakeholders that will be interested in developing this business. So giving the business a chance, giving them some rope to improve and advance along the learning curve. So looking ahead, the company is forecasting revenue of $650,000 at the midpoint in Q3. That would be an increase of about 200% at the midpoint. And their goal is to develop and launch 2,000 robots by the end of 2025. That would be a big increase from its current robot total, and roughly 4x increase this year overall if they hit this goal. After hitting that 2,000 robot deployment, they're going to kind of take a pause and just try and improve operations. They feel that when they have their full deployment and target utilization of these 2,000 robots, that they can generate annualized revenue between 60 and 80 million, 70 million at the midpoint. So growing from 650,000 to 700 million, 650,000 is the quarter. For the year, they'll be at a couple of million, but growing from a couple of million in revenue in 2025 to 70 million potentially in an annualized revenue run rate by the end of 2026. So that doesn't mean that they're going to generate 70 million in revenue in 2026. But what management is saying is they'll reach an annualized run rate of 70 million at the midpoint in 2026 at some point. That means at some point in 2026, they'll have roughly $7 million in revenue in 1 month. And that could be at some point in the middle of the year or by the end of the year. And then in 2027, that could mean that they generate revenue of around 70 million or perhaps more if they add new robots to its fleet. So it's an exciting business. It's one that I've had rated as a hold for 2025. It's one of those businesses where If you're interested in a stock that could, 10x your money or 100x your money, this is one of those businesses. This is one of those businesses that could do that because of the market they're operating, the market they're addressing, the technology they're developing, and the innovation they're adding, and the stakeholder benefits they're creating, which is creating incentives for restaurants and everyone in that ecosystem to support the business, to give it runway, to give it time, to give it contracts so that it can develop, because a lot of businesses are interested and hopeful that it can grow to become a stable provider of food delivery, because that would lower the cost of the restaurant industry on food delivery, which could open up a broader market opportunity for restaurants. It can open up more occasions where people order food for delivery. Already the food delivery business is growing robustly. People love the convenience of having food delivered to their home from their favorite restaurants. And if you can lower the cost of delivery, that could be a meaningful expansion in the number of times people order food for delivery during the week. Exciting business. I'm looking forward to learn more about this business and follow its growth trajectory. Hey, thanks for watching. I truly respect every viewer who takes the time to seek qualified financial analysis. Unfortunately, there are a lot of unqualified voices online giving unsubstantiated stock advice. My goal is to provide research that's grounded in data and professional training, not just what's popular. For those new here, I hold a master's degree in financial economics. I'm a CFA charter holder, an author, an adjunct professor of finance and economics. I've spent nearly a decade researching stocks professionally, and I'm here to help you make informed investing decisions. If you found value in this analysis, make sure to subscribe and consider joining the channel as a member for early access and in-depth members-only content.